Ladies and gentlemen, welcome back to the Crypto Trading Room. Today is March 19th, 2024, foul year of our Lord. Hopefully everybody's doing fantastic wherever you happen to be watching us today. All right, we've got a fantastic show for you today. We are going to be breaking down the fact that Bitcoin is now breaking critical weekly support, as you guys can see on the chart. So we are going to walk you through our analysis on the weekly time frame. We're going to dive down into the daily and then also cover the intraday here on Bitcoin. We'll also do the same for Ethereum. We will take a look at the altcoin sector and see how that is progressing. And if we have time, we're going to look at some cool on-chain metrics as well as taking your chart requests and, of course, opinions. Before we get started, we'll also have a member announcement a little bit later on into the show. If you like the content, don't forget to hit the subscribe bell and like the video. And let's get going with today's analysis. All right, Bitcoin on the weekly time frame here. Let's actually start the recording just in case I want to upload this later. I am remembering life is good. On the weekly time frame here, let's talk about this. All right. So let's just first off start off. We do have, of course, have a weekly closure as of last week. We have a new weekly candle. So let's go over it. As we know, if you guys have been following, this simple strategy, this is a strategy in the spirit of Pathways to Profit. This is the methodology that we teach in our trading academy. To all of our students, this is the methodology that I trade myself, although I do use a different system myself, but I like using this public system. Everybody can use this. These are all free indicators, and it's a very profitable system. So we are using TSI, the True Strength Index, as our initiator, which is the key component of our Pathways to Profit strategy. This is the indicator that tells us essentially when to trade and in what direction to trade. Thank you very much, Cheesy Business. Hope you made money, my brother. We have True Strength Index, and when the blue line, which is the True Strength Index line, the red line is just a simple moving average. So let's go into the settings so we understand what's going on here. The True Strength Index, and since I've actually written multiple versions of the True Strength Index, we have a long length and a short length. This is used to calculate what our True Strength Index value is. It is a double smooth price change oscillation. And then we have our signal length. This is the red line. This is just simply a 13-day simple moving average of the TSI, and it acts as a signal line. So when the fast line crosses over the slow line to the upside, when we cross over to the upside, we want to go long. When we cross down, we want to go short, essentially. And the True Strength Index is a wonderful indicator. It's really, really good on pretty much any time frame. And if you can pair that with a volatility indicator like we have down here in BBWP by the Caretaker, fantastic script on TradingView from the Caretaker, you can really get really good entries and filter out a lot of bad entries, because the strength of the True Strength Index is the fact that it's not extremely sensitive, but that's also its weakness. All right. So the True Strength Index can be a little slow to trends on the daily time frame. All right. Because it wants to filter, because it's double smoothed. All right. It's not as sensitive as something like the Relative Strength Index, which is not smoothed in any way. I mean, in the sense that it's a simple moving average over a price range, but beyond that, there's no smoothing algorithm or smoothing function applied to it to smooth out the indicator itself. So the True Strength Index is really good. It gives powerful signals, and it tends to keep you in a trade a very long time. All right. So for example, here, True Strength Index on the weekly time frame told you to go long on Bitcoin back in October of 2023 and has not yet told you to get out of the trade. All right. Now, we do use the Relative Strength Index to get out of trades faster than the True Strength Index. All right. So for example, we did take the signal and we did go long here. All right. Volatility had recently come out of crush, and we were now in a period of volatility expansion. This is exactly what we want to see. We want to see, after a period of consolidation, we want to basically be trading the breakout into a new trend. All right. And we can see that as we entered into a consolidation period, so we have an entry here, and then we have a consolidation period where Relative Strength Index does cross over on this bar. So we do end up exiting out of the trade on this bar. So from here to here, not a bad trade. All right. So from here to here, capturing about 20% on BTC. And then we can see price goes sideways, and RSI tells us to get back in on this candle right here. And RSI, let me go ahead and delete these lines that I've made, because RSI is about to be giving us another weekly signal. Now, it hasn't happened yet. But RSI on the weekly time frame is threatening to cross and close underneath the signal line. And if that does happen, then RSI would be telling us that we do need to be closing out weekly long swing positions. All right. It's been a good run from here to maybe here, from here to here. And it is time to be closing those positions out, waiting for a market reset, waiting for a period of consolidation, and then trading the next breakout. That's basically where we're at with our weekly strategy right now. We are still currently holding weekly long swings, but when and if this weekly candle closes bearish, a little bit more bearish, as it is right now, as we can actually see, excuse me. Let's pull open the data window so we can always check and see. RSI is at 75.58 and the RSI base moving average at 75.95. So we are actually, we can see that if we zoom in more, we are actually currently underneath the signal line. So actually nothing needs to happen. If simply this week closes like this, that will be our weekly signal to close out long swing positions. Another interesting note is that you can see this yellow line on my chart. I had drawn this as my essentially all-time high breakout level. All right. Now, I was anticipating that the initial breakout would get faded, which it currently is right now. But this is an important level. This is an important level for price. Prices above this level of 64,325 approximately. I have it at 64,895 as I have it drawn on the chart. This is a very important level because this is, in my eyes, the breakout level. Prices above 64,000, we start to get 70,000 very quickly, 80,000 very quickly, 90,000 very quickly, and we start moving into that kind of next trending phase of the bull market. Prices below 64,895, the sellers are in control of the market. The buyers have not stepped back in and resumed their dominance of the market. Right now, sellers are in control of the market, as we can just simply see from the direction of the weekly candles. So, big picture idea here, we are waiting for the weekly to close back above 64,895. We could just call it 65,000 if you didn't want to be very specific about it and wanted to use a more psychological level. That's completely fine. So prices back above $65,000 are one of the signals to be full steam tilt long. And we're not talking about weekly wicks above. I want to see weekly closes above 64,895. Weekly closes above 65,000. That's what I want to be seeing. So for the momentum traders out there, for the breakout traders out there, that is the signal that you're watching for the weekly to be sustaining itself back above 65,000, indicating that this recent flush out, that this recent pullback has filtered itself out of the system and that the buyers are back in control of the market. Because you do want to, of course, see that the buyers are back in control before taking a long position. Typically, it's kind of a good idea. All right. So as long as we're below 65,000, the outlook is bearish. Okay. But not super bearish. I'm not really looking for these big 50% drops that some analysts are calling for. Certainly, listen, we could certainly enter into a season of decline. All right. If ETF flows slow down, we are seeing some troubling things. I think that altcoins could potentially take a hit. So for example, we were seeing insane trading volumes. We were seeing insane trading volumes coming from our friends over in Korea on UpBit. UpBit being one of the most, being the #1 Korean exchange and a very good proxy for how altcoins are doing when we analyze UpBit volume. And we can see that while they were going absolutely cuckoo for Cocoa Puffs over the last few weeks, their volumes have fallen off significantly from, I think, a peak of 16 billion per daily volume down now back to 8 billion. All right, so that's pretty significant. So potentially the Koreans have kind of, their appetite for altcoins has kind of paused. I'm sure you've heard me talk about the kimchi premium before. This is the price of Bitcoin on UpBit versus other exchanges. And we did see that the price of Bitcoin on UpBit did reach a premium of 9%. And historically, that is about as high as it goes before that premium adjusts and corrects itself back down to the mean, back down to the same price as other exchanges. So that's what we're seeing right now. We are seeing altcoins take a hit. We are seeing a little bit of the Ethereum BTC narrative take a hit as well, with Ethereum kind of having been running up alongside Bitcoin, but on somewhat faulty fundamentals. As we can see, we now have the Denkin upgrade, of course, but that's not going to directly benefit Ethereum. That's going to directly benefit Ethereum layer 2s as opposed to Ethereum. And since if Ethereum goes down, altcoins tend to go down, we do see Ethereum moving down and it taking altcoins with them. So definitely could see more pain in store over the next couple of weeks. In general, I am expecting lower prices for the next 2 weeks, but not in a very sudden, sharp, and dramatic way. More of a sideways consolidation. Our best bet here is, our best case scenario is price going sideways for about 2 weeks. Worst case, I think a worst case scenario is, and overall in that 2 week period, I am eyeing the $60,000 level for BTC. You know, we are at an area now, and we'll see this on the daily when we go down to the daily. We are at an area now where buying the dip does make sense. All right. If we measure from the peak to the bottom here, we've had about a 15 or 16% retracement. I would really like to see prices kind of come down here and take out this low and put in a 20 to 25% correction. So we're looking at anywhere between 60 and 55,000 that I think it becomes more appropriate to be buying the dip. You know what I'm saying? To be buying the dip. We do want to be overall bullish. We do want to have a bullish weekly posture here on the weekly time frame. So of course, where's our EMA 21 at? Coming in a little under 50,000 at about 49,000 is where our EMA is at. So we can absolutely have a nice healthy pullback to 50,000 and then resume the trend. That's completely fine. We could have, you know, what's more scary at this point in time? Well, if we come down and really tap the 55, right? That's going to be about a 40% correction and would be in line with what we typically get in Bitcoin bull markets. And as Plan B said, we are now transitioning out of the accumulation phase of the bull market into what is called the bull market proper. And the bull market proper does have those bigger pullbacks, right? Those 30 to 40% pullbacks that we all love and fear so much. We do know that there is intense buying pressure. You know, a lot of people who missed out on this rally and saw kind of Bitcoin take off without them. So everyone wants Bitcoin's price to come down a little bit more so that they can buy. All right. We shall see, because that is what people say when prices are going up. And then when prices start going down, it just becomes much more difficult to press the green button for some reason. I don't know. It's just so easy to press the green button when all the candles are green. But when you see a sea of red, man, it's psychologically difficult to press that green button. I'm not going to lie. For most individuals and traders, it's a very difficult thing to do. Yes. So anyways, that's what we've got. Summary on the weekly time frame. We are currently still holding weekly swing longs. We are looking to close those out at the end of week as the relative strength index is looking to cross underneath the signal line. We are in our second week of red-lined volatility. All right, so we are in a very dangerous area of the market. Reversals here are very common in areas of red-lined volatility. We do not take big reversal trades. We do not tend to short the market, although of course I did this last time, but hey, you know, like, do as I say, not as I do. And we are looking to see Bitcoin over the next couple of weeks pull back to $50,000 to $55,000 is what we'd be looking for. What are things we're looking for to invalidate this and kind of let us know that, oh no, this was the pullback and we should have bought and prices are going off. We do want to see the weekly close back above $65,000, 64,895 to be specific. That's what we are watching. Let's transition down to the daily time frame now. Of course, as you guys know, we did take this pretty nice short on the 4-hour time frame. You guys are free to do with this as you want. We can just kind of go ahead, and we did get a push up off of that 21 EMA, although we were unable to clear the 9 exponential moving average. So we just kind of hovered in this EMA cluster, and we have now broken down across the 21 exponential moving average, meaning our next level of support on the daily time frame is down here at the 55 EMA around 58,227. So we will likely see a wick down to that. Very bullish if price closes above 60,000 would be quite nice to see at this point in time. And of course, we can see that there is support here. All right, there is support here from this previous movement down. So we do know that there are buyers in this area. It will remain to see who wins the battle between the market sellers and the limit buyers once we spend some more time consolidating in this area. Let's see here. On the daily time frame, TSI has, of course, turned bearish. Relative strength index has, of course, turned bearish. We had our early warning sign from BBWP with redlined volatility all the way back over here in February, the end of February to early March. So at the very beginning of this month, we got this warning sign that the market was about to pull back. We got a little bit more limited upside. Price went up about 15% more before we did get this topping pattern and this pullback on the daily time frame. So again, what am I looking for, like a immediate sharp drop down? No, but of course, if the market sellers are in control, you always know that market sell flow is going to be here. If we analyze, let's go down to the 4-hour time frame now. Let's go down to the 4-hour time frame, and I'll just show you guys how I identified this topping behavior, and so things that you can watch for in the future to identify market tops via technical analysis. So let me get rid of the EMAs here. And I just want to look at basically this. Excuse me. this previous run up that we experienced in BTC. Here we go. So we can look at this run up right here. As we look at this run up that began in the consolidation range around 51,000 and ultimately peaked here at 64,000. So we had a nice BTC rally of about 25%. And that took about 2 days and 4 hours to complete. So a nice 2-day rally that we experienced here. If we look at this rally, we can see that there's not very much selling in this rally. All right. We just have a couple of little candles here. None of these candles are big. This selling is not significant. This is not a painful pullback. I mean, even this candle, this is a 1.5% pullback candle. And then of course we do have a pullback here, but price immediately recovers, goes back up to the high, makes a higher low, and then immediately goes into another rally. Now, if we compare this rally with this rally, we can see a big qualitative difference. All right. And the big qualitative difference is the amount and the ferocity of the selling. All right. So immediately following this big rally right here, we get an immediate dump all the way back down, well below previous support. That is very significant. After the initial sell-off and then the rebound, and I entered on this blue candle. All right. This is all live. You guys can go back and check. I'm not fooling you. I entered on this green candle. I've drawn a lot of things on the chart, so let's get rid of some of those. So we have a 4% pullback. We have a 4% pullback. And then of course over here we had, this is like a 15% pullback. So very significant pullbacks that we hadn't been, and then we have a little bit of bearish divergence crossing into the signal line very strongly here. We could have used that. BBWP, we didn't really redline here unless your settings are different, but that's another potential way. You could have used any other momentum. And then identified regular bearish divergence right here. So 2 candles before the dump and then unusually high volume right here. So time transformation did accurately call this top right here, called regular bearish divergence here, called a sell signal here, and called regular bearish divergence here as well. All sell signals, hidden bearish divergence here right before this sell off. So yeah, time transformation's been slapping here pretty good. Looking at Minx. Let's actually change this to a 3 and see how we would have done here. Yeah, we have regular bearish divergence from Minx, and Minx gives the sell signal on this candle right here. So Minx gets you into this trend here and gets you out basically right around here. All right. And then gets back in here. That's pretty good. So yeah, Minx on the 4 hour was absolutely crushing this as well. So either of our proprietary momentum oscillators, time transformation and Minx, would have caught this very, very well. And yeah, so that was basically the method and the process of identifying this. You know, when we're looking that prices will behave, or price will respond differently or behave differently. And that is the reason that I ended up taking the short. We got the breakdown confirmation and it just re-entered on the retest. All right. Obviously the trade could have gone wrong. I entered here and price could have continued pumping and I would have had a losing trade. And that's part of being a trader. When we look, excuse me. All right. Sorry about that. We can see that price has done a dramatic shift from a nice bullish trend where the 55 and 21 exponential moving average were supporting us as support. We have made a dramatic trend shift. We are now trading well below the 55 exponential moving average, and the 21 and the 55 are now acting as resistance. Okay. So that is important to watch for. We do have price, which has now come down to the 4 hour 200 exponential moving average. This is a significant level. Lots of traders trade on the 4 hour time frame and consider the 200 EMA significant. So I would expect to see some support here. All right. I would expect to see some support here and potentially even a rally up here to maybe 67,400, 67,500, something like that. Just to confirm that the 55 exponential moving average is indeed resistance. And what we could see here, and this is actually maybe the most likely scenario, what we could see over the next, maybe week, is we just see basically this act as a floor for price, or this range basically. And I'd basically like to see price trade within this range with a deviation to the upside, maybe a deviation to the downside. And then ultimately, I would probably like to reshort the next deviation above this trading range to be targeting that more pronounced movement down to 60, right? Which is what I'd like to see. So I think that we could probably safely trade this range between 62 and 67 for perhaps a week. Would be nice to see without an immediate move from BTC. This is a pretty dramatic move from BTC, this 15% pullback. And again, finally finding support not only on the daily in the form of the 21, but also the 4 hour here in the form of the 200. All right. So that'll make sense to me. That seems pretty decent. Let's see here. 4 hour PTP. We did go briefly oversold there. So again, 4 hour PTP positions 4 hour swing positions can probably be closed out at this point in time. You know, and I think that's probably nah, we'll just hold. Nothing to do. That's all good. Okay, let's see here. Let's take a brief pause and check out the chat. Challenged Investor says we've got a year plus for prices to go up. The trend is your friend. Wish I had more cash when the candles turn red. Indeed, indeed. Alex81SG says the stock market is still hanging around all-time highs. Bitcoin might be front-running a broader correction here. I think that makes a lot of sense. I really do think that makes a lot of sense. You know, I spend a lot of time and money on research and analysis. And so I do ingest and consume a lot of stock market related material and analysis. And that is kind of the consensus among the analysts that I respect for the traditional markets as well. Challenge Investor says the Treasury has already moved from quantitative tightening back to quantitative easing. Fed rate hikes mean little. More quantitative easing results in inflation and higher prices. Rate hikes just hurt the economy, but do stop inflation. Indeed. Indeed. So, okay. That's what we've got for BTC. All right. So overall, oh, sorry. Let's actually do PTP on the daily time frame here. All right. So PTP on the daily time frame, no trending shorts are acceptable right now. We've broken down below the 21 exponential moving average, so no reversal baseline bounces. The next trade setup would be a reversal baseline bounce down here at the 55 EMA. So be looking basically for limit bids around 58, 57,000 to catch a down move there. And then looking for that movement back up. Probably here to here. So again, just mid-range is a probably safe entry or a safe target for that trade. Targeting 58 entry at 58,000 and looking to get out around 61, high 61s, maybe 62,000 would be the bounce trade there to the bull side. Yeah, we don't want to be taking any trending shorts above the 55 exponential moving average because the daily trend has not turned yet. So life's all well and good as far as that goes. 4 hour time. So again, basically just flat on the daily. We'd already previously closed out daily swing longs back over here. And then we got chopped up a little bit here and then got full confirmation to be out of daily swing longs on March 14th. So no daily swing longs. 4 hour time frame. We do have a potential, like, you know, it's already played out. The 4 hour, you guys can see how these baseline trades play out, right? Or these major moving averages trades play out too. We have price come down to the 200. It immediately bounces. That trade's closed, right? Like, we're not recommending like, oh, just because we're at the 200. No, like you play the initial bounce. It's time sensitive, and then moving on. Shout outs to Kimozabi. Good to see you in here, my friend. Yeah. So this is pretty good. I'm probably going to be closing out my copy trade position. Again, you guys have to remember I trade with a bit of a handicap because I can't take partial take profits with the Fairdesk system. And you know, you guys can see I've basically captured the entire meat of my position here. Feel very happy about it. It was a good trade. Yeah, 4-hour volatility is very high right here. So I kind of don't want to be in the market right now at this point in time. You know, just the potential for a bigger swing to the upside. But again, we're going to face resistance around 67,000, 68,000. So there's not too much to be, the YouTube channel memberships. I did not realize that when I did that, when I edit tiers, it basically, I don't have the option to edit a tier. Like once I have the tier accepted by YouTube's review panel, it is what it is. And if I want to, that will be available to individuals who become YouTube channel members or who sign up for our affiliates. That is how they can gain essentially free access into the members area. We also are transitioning our current member offering inside the Discord over to Kajabi, where we will be calling it the Trading Academy. Where we will do, that's where we do our educational work. That's where we do our coaching and mentoring. And that's where we work with individuals aspiring at experienced traders to build and improve on their current or non-current trading strategies. That's what we do professionally. We also offer trading tools, our premium indicators. Anyways, all that to say that because of not having it set up correctly, we did unfortunately lose all of our channel members. So we do now have it set up. So if you guys would like to become channel members, you will gain access to some exclusive perks in our Discord, such as our signal channels and such as our private members launch chat room, where we share alpha, insights, strategy, and just basically discuss the market. So if you guys want to get access to that, you guys can get access to that by currently becoming YouTube channel members. And next week, I am going to work on setting up the system for allowing all of our affiliate signups to also get access to those things through an automated system. So hard at work at that. We do now have to restart purchase the membership. We do kind of have to start all over again, but it's not as if your money went nowhere. Anybody who purchased the membership within the last 30 days got their money refunded to them. So all well and good. So if you guys want to get a membership, get a membership. You get some cool Discord access. All right. Let's see here. Okay, with that out of the way, we can now talk about the hourly time frame. The hourly time frame shifted bear all the way back here on the 14th of March, kind of setting up a bearish trend. And we can just see multiple setups that I advocate here. Obviously, so on our EMAs, let's get rid of the 9 and we'll just focus on the 21, 55, and 200. That's all we really need. We can see that once we break our 55 EMA baseline here on the hourly, price goes down to the 200. That's a trade. Bounces to the 55. That's a trade. Breaks down through the 200. Okay. This is telling you that this first breakdown of the 55 is telling you that we're moving into a bearish trend. This breakdown of the 200 confirms it. And then this pullback and retest of the 55 again really confirms it. So where is the optimal place to be entering for shorts like this? Anytime you get a nice EMA cluster like this, boom, in between the 200 and the 55. It's just a perfect cluster when price is kind of figuring out where it wants to go. Okay. So hourly short trend. All right. Again, here's another fantastic opportunity right here. Price pulling back to the 21 EMA, setting up a short position right here. All right. Where are areas to look for short entries? Between the 21 and 55 EMA cluster, between the 55 and 200 EMA cluster. Okay. All of these kind of reversal baseline bounce setups that we advocate and talk about all the time. Let's see here. The hourly did give us. So we have volatility crush here. So we wait for volatility crush. And then we get that expansion over here. Vol below 20% or ideally crush. And then going back above 20% is good. Got that from Tyler. And we can see that on this candle that's generating the signal, we're basically good to go. We are above the baseline. So although an entry here would have been great, an entry an hour later is not too bad. We miss out on a little bit, but not too much. That's completely fine. Reversal rebaseline entry here. RSI resignals the short. We could take the short here, 5% potential profit. Price comes back to the 55, another potential re-entry. TSI crosses underneath here. We are below the baseline. So this is a beautiful signal. Same thing. Volatility went down and came back up. So this beautiful short setup right here. We have a pullback. Beautiful potential entries here around the 200 EMA. And then TSI crosses back underneath here. RSI confirms. And volatility crush is expanding here. So we get in. We basically kind of short the bottom here, but it's just a mild pullback. And then we get the trend. So life's all good. And then we did have some regular bullish divergence here on the hourly time frame, leading to this pop. So what do we want to do now? Well, again, you do have price coming down to that more important, like 4-hour 200 exponential moving average. So I wouldn't be too hot to short right now. Like I said, I think we probably range between 62 and 67 for the next week. So I would be looking for short entries here on retests of the 4-hour 55. I would probably initially long any deviation below the 4-hour 200 EMA. And I would be shorting any ridges are fine. Just only trading full PTP signals is fine too. I just analyzed that we had 1, 2, 3 of them. So 3 trades over the last few days. All of them nice, juicy short setups. All good. So however you guys want to trade, it's completely fine. Let's go down to the intraday right here. And just talk about essentially the, this is the 15-minute bottom feeder strat. Essentially, just basically buying. I think we get out of all those. Those are fine. The DCA is down into this dip very heavily. Gets out here. And it's actually going in now for a long position. That makes sense. Take that off there for a second. On the 15-minute time frame, what do we see? All right. So let's talk about Ethereum. Ethereum on the weekly time frame, similarly bad, all right, but a little bit worse. All right, Ethereum on the weekly time frame, similarly bad, a little bit worse. Right at the end of this consolidation, and then got the re-entry signal 2 weeks later. Ended up entering on this pre-breakout, rode this all the way up, and we'll be closing this trade out on this weekly candle. So we were able to capture about a 30% move so far if we close roughly where we are right now. Of course, a week is a long time. A lot can happen. We, of course, did get warning signs of this. We warned about this with our weekly redlining volatility. All right, just is what it is. We recommended individuals taking profits. So, but a full close signal will be coming on the close of this weekly candle because of the RSI closing below the signal line. Very easy to understand, very easy to trade and implement. Important support levels for Ethereum. I mean, our exponential moving average 21 is all the way down at 27.26, and that is another 15% decline. So I absolutely think that Ethereum can make it there. I am expecting a little bit more of a flush out on Ethereum relative to Bitcoin. Let's see. Anything else significant here? We're not redlined in volatility anymore, so that's pretty good. We do ideally want to see a nice period of consolidation, but we're in volatility now, guys. So trading is a little bit more dangerous than it was. We're coming out of this weekly redline volatility, and it might be a month or so, or even longer, before we start getting nice, consistent weekly signals. Of course, until then, we can trade the daily and things like that. So other than that, on the weekly time frame, good. I really don't see support down here until like 2,700. That's our first level of initial support. I would probably definitely initially be a buyer here, of course, because this is just a return to previous support, or excuse me, previous resistance as well, retesting it as support. It's also where our weekly 21 EMA is. So I would expect to see a pretty powerful bounce there. And if we fibbed it, I mean, we might, oh, what the heck? That's not what I wanted. I wanted a fib. That is not a fib. I wanted a fib. Yeah, I would say a bounce from there to like 3,200, completely possible. So that's probably the next, like by the dip signal that I will be putting out, or trade that I'll be putting on. If price gets down here to about 27.21, I'd be buying that dip. Ethereum on the daily time frame. All right. Load this up. Closed on the Darth Maul candle. Entered here. Closed here. And then we got chopped up here. Entered and closed. And then TSI gave the exit signal here. TSI told you to be out of daily swings at this point in time. Price comes down to the 21 exponential moving average. We do get a bit of a bounce here, but it is not convincing. It is not a strong daily bounce. And then immediately chunked down to the 55. I would expect to see a bounce here on Ethereum. My dear Lord, why do I keep doing that? So I am actually expecting to see a bounce here on Ethereum. And so let's just mark that out. And a day of redline volatility as well. I'm not too happy with that SL, but I mean, I do expect to see a bounce off the 55 here. Yeah, so I think we just do that. Let's do... There we go. And stop. 30 minutes. Grand. So gotta ask ourselves though. Think about the daily here. All right. So yeah, I mean, usually when the daily is, so usually the daily wants to go to the 55. So I think we don't close. I don't think we close our BTC short. That seems silly, especially if we're going to go long on F, right? I think the market's a little too risky for that right now. So we're just going to go long on Ethereum. Nothing insane. And let's target 36.48. 36.48. And 30.90. I really, you know, I'm not the biggest fan of that stop loss, but it's going to have to do. And it's well within our risk tolerance. That stop loss is 5.63% away, so 10x leverage is fine. We don't theoretically need to use leverage. Oh, that's fine. Last price for TP. This is all good. All right, so we're going to buy that long. Good question. So I'd say for the moment, I kind of have to be. Crypto Rick, that's a good question. So here's the daily chart of ETH Bitcoin. All right. And we're getting to the point where I need to make a decision, but I don't need to make a decision just yet. All right. We're still in the zone, okay, where I would like to see Ethereum Bitcoin begin to do its thing. I do have my opinion on, I guess I am theoretically thinking, not theoretically, I guess I am thinking that Ethereum is likely to take a bigger hit here over the next couple of weeks. But honestly, for my portfolio, it would be great if I was wrong. It would be really good if I was wrong. All right. Because I've already kind of made the commitment here to swap a lot of Ethereum over to Bitcoin, or Bitcoin over to Ethereum. So I could easily reverse that, of course. All right. And take like a 10% haircut at this point in time. Actually, it wouldn't even be that much of a haircut because I DCA'd it, right? I averaged it out. I had the bot do it. So, I mean, almost all my entries are down here in the lower range, right? So, I mean, I might even like be mostly break even at this point in time if I were to make an immediate swap out. So we're still in the support zone. We haven't broken support yet. So I say we give Ethereum Bitcoin more time to pick out exactly what we want to do. We do, of course, have a bearish trend in Ethereum Bitcoin, and we are counter trading here. We are looking for we're looking to be contrarian investors into the Ethereum Bitcoin ratio. And I'm patient enough to let this kind of play out, right? Patient enough to let this play out. So let's just see, how it's going to be. Let's give it a week or so. Obviously, if we start closing below the, 0.04789, maybe another 10% down, then we're going to have to make decisions just because of risk, but it is what it is. So for the moment, yes, I am still confident in the trade. All right, let's look at USDT dominance. Apologize, guys. Give me 1 second. I'll be right back. All right. Thank you for your patience. All right. USDT dominance. As you guys know, USDT dominance is a fantastic correlation to basically determine what direction the market's going to move into. If USDT dominance is in a bearish trend, typically the market is in a period of markup. And all we need to do is really just there we go. Now we have the price of Bitcoin overlaid with it. And you can just basically see it as almost a direct correlation. When USDT dominance goes down, Bitcoin's price goes up. When USDT dominance goes up, Bitcoin's price goes down, and CHOP is equal. Here we have Bitcoin's price going down, USDT dominance going up. And here we, of course, start USDT dominance going down and Bitcoin rallying very powerfully. Okay. And now USDT dominance going up, Bitcoin's price moving down. All right. This is a pretty simple, clear correlation to do. When people want to sell, they sell into Tether and they tether up. All right. So USDT dominance just had a very powerful bounce. USDT dominance is heading up. It is broken above the 21 exponential moving average. Okay. As you guys can see here, there's not a ton of respect for our moving averages, of course, because this is just a data metric. So it's not like price where traders are watching this and these EMAs kind of become a self-fulfilling prophecy. But they're very helpful for tracking kind of bigger trends and bigger movements. All right. So far, USDT dominance is still in a bearish trend. All right. Meaning that on average, the market is still going to be moving up. All right. But we are seeing this punctuated moment of USDT dominance moving up. Let's see. Yeah, we'll just have to keep an eye on this, right? Just have to keep an eye on this. But essentially, once you start to see USDT dominance struggle, falter, consolidate, then you can begin anticipating the market reversing directions. Okay. Let's go through our Fairdesk copy trade pairs with bottom feeder. See what bottom feeder is signaling for, if anything. Okay. Bottom feeder not signaling on Bitcoin or Ethereum or Solana. Bottom feeder is firing on Arbitrum. Bottom feeder is firing on Optimism. Bottom feeder just had a successfully closed leg of trade out on Sui. Bottom feeder is firing on Link. Looks like bottom feeder had a failed trade on Uniswap. Yeah, bottom feeder's not firing on a lot of altcoins, which is very interesting. Looks like bottom feeder had a failed signal on VeChain. Bottom feeder is currently averaging into an LDO position. So yeah, Arbitrum, Optimism, Link, and sorry, the other one was LDO. Yep. LDO, Arbitrum, Optimism, and Link. Our strategy is going along with. Let's see here. Ali says, hey, Justin. Let's actually go over here. That on Fairdesk, for example, when we're setting up our trades, we're going to have the option to switch between mark price and last price. All right. I do have a fuller length video on this, but essentially let's do our best. I think it might be better if we pop out the whiteboard for this. That'd be good. Okay. So let's do it like this. So, Futures are we have spot. And we have futures and options. Okay. Now, what are some characteristics of spot? All right. So in spot, there are buyers and sellers of the underlying asset, right? Like what is actually being traded, right? In this case, when you go and you spot buy BTC, you receive physical BTC, right? And in exchange for whatever you traded it for. It could have been, you could have traded Ethereum for it. You could have traded USDT for it. You could have traded USD for it, right? So in any case, when you are purchasing from the spot market, when you purchase from the spot market, you are actually buying the underlying asset. And as all things, you are actively moving price. Let's talk about the different orders that you can use to move price. Market order versus a limit order. Okay, these are the two types of orders that you can use to actually buy or sell something. You can use a market order or a limit order. Do you guys know the difference? And do you guys know that only one of these moves price? Limit orders do not move price. They are physically incapable of moving price. Market orders, also known as aggressive orders. And so we can see here, this price right here is the last traded price. All right. This is the active price on the marketplace. So we can see, I'm just going to hover over this and zoom in. Okay. This is the last traded price. This is the mark price. Okay. We're going to get into this in a second. We can see here, this is derived by index price and funding rate and reflects the fair market price. Liquidation is triggered by mark price. So that's important. Liquidations are never going to be triggered by what the last traded price is. Liquidations are always going to be triggered by what the mark price is. And as we can see here, 32.8345 is where the last price is. And we can see that the mark price is 32.8280. So we can see that the mark price lags behind the last price just a little bit. In times of extreme volatility, that difference can spread. And there are actually traders who use a strategy of analyzing what the spread is between mark price and last price to determine what volatility is to enter or exit trades. So that is a quantitative element that quant traders would utilize. And you say quant traders, you don't have to be this super smart nerd to be a quant trader. Like technically, if you are using technical indicators purely and just using objective data points and you're trading off of that, you are trading quantitatively, right? You are trading quantitatively. And that's what I want you all to be. I want you all to be trading in some semblance quantitatively. We all use some form of quantitative analysis in trading. Okay. So we know that mark price is derived by index price and it's influenced by funding rates. So let's, before we get into mark price, I just want to do quickly the difference between market price and market price and market order and limit order. So I'm actually going to zoom out here and move my, whoa, what is going on? DSLR camera. Slide me over here for a second. And now we can zoom in back on the order book. So I want to explain market price, market orders versus limit orders. Okay. So this is an order book. This is telling us, this is really what all exchanges do. This is the service that exchanges provide us. They match our orders with another order so that we can actually enter into a trade. We can see here that there are sell orders here at 32.8215. All of these are limit orders. All of these limit orders add up to 12.15 Ethereum, which is equivalent to $39.88 thousand, all right, or USDT. And we can see that this price is just a little bit above what price is right now. This is the current price of the futures contract that we're trading. And this is the lowest available ask. All right. So this is the best price if we wanted to buy BTC right now. We are not able to buy BTC for this price because there's nobody selling BTC at this price. There are only people selling BTC at this price. So if we wanted to buy BTC right now in this moment with this order book, this is the lowest price that we could get, 32.8215. All right. The way that we would accomplish getting that price is we would use a market order. A market order is an instruction to the exchange that I have a certain amount of cash and I would like whatever I can get in crypto for the lowest price, right? I want to buy as much, whatever, Ethereum in this case. I want to buy as much Ethereum as I can with this amount of money, and I want to pay the least amount of money for it. I want to pay the lowest possible price. So what the exchange will do, or what the matching engine specifically will do in the background, is once you submit that market order, it will look at how much cash you have, and then it will go and look to fulfill you with the lowest possible price. Now, if your order is for 1 Ethereum in this example, excuse the small font, but if your order is for 1 Ethereum and you do a market order, we can see here that there is sufficient liquidity. There's 12 Ethereum at this price point. So you could get filled for 1 Ethereum with no slippage, right? Slippage is when you use a market order and pay a higher price than you were intending. Because there is not available liquidity at the lowest available price. So if, for example, there was only half an Ethereum of liquidity here, and you put in a market order for 1 Ethereum, you would get half an Ethereum at 32.8215, and then you would go to the next order level up to fill the rest of your order. Well, if there's half an Ethereum here, then you're good. You'd got half of your order filled for 32.8215, and half of it filled for 32.8225. You would take the average of that, and that's your average entry price. And that's what would be displayed, for example, in your trading terminal up here for entry price, right? You use a market order and you get filled at multiple prices. It'll just take those weights and the different prices. It will average them out, and that will be what your entry price is, okay? It is the action... We can see the order books change. It is the action of market buying more than is available at current levels that moves price up. That is the action. So the reason mark price is 32.8790 and not 32.8810 right now is because nobody has bought up all this Ethereum at 32.8810. Okay. Once if someone comes in with 18.76, or someone comes in and puts in an order for 19 Ethereum, price will change from 32.8790 to 32.8815 because that is the next available price. So it is market orders that actually move price up. When people are aggressive and they want it now and they want to buy right now and they're just willing to submit cash for the cheapest price, it is that come and interact with them. Limit orders cannot interact with limit orders because limit orders are set at different prices. So a limit order to buy interacts with a market order to sell. A limit order to sell interacts with a market order to buy. Okay, that's how that works. Now, I believe your question was actually about mark price, last price, index price, and whatnot. So, okay, so we've covered all this, all right? So we know that market orders move the market, limit orders allow market orders to be fulfilled, or limit orders fulfill market orders interact with limit orders. Market orders move the market because they are aggressive, and spot markets, we are buying and selling the underlying asset. Let's talk about futures and options contracts. We are not buying and selling the underlying asset. We are trading a derivative. This is a secondary. When we look at the spot price of Bitcoin on Coinbase, for example, the spot price of Bitcoin on Coinbase is where it's at because of all the market participants on the Coinbase book, right? Buying and selling on Coinbase, right? When we look at a futures contract, same thing. The price of the futures contract, this price right here, is not influenced by Coinbase or Bitstamp or BitMEX or whatever. It is only influenced by the active buying and selling of everyone on Fairdesk on this contract. So this or this Ethereum USDT contract is unique to Fairdesk, just like ByBit's Ethereum USDT perpetual contract is unique to ByBit, just like Binance's Ethereum USDT contract is unique to Binance. And the prices on all those exchanges are regulated and moderated and changed by only the traders in that marketplace. Of course, there's arbitrage and all kinds of advanced and complicated trading styles and strategies and market making and liquidity profiles. But at a fundamental level, that's how it works. So we kind of have to ask, well, I said that the price of the futures contract is not influenced by Coinbase. And that's kind of true, but it's also kind of false. Because we do need to set like a precedent for what price should be, right? Like a standard for what price should be. You know, it wouldn't make sense if, for example, you know, let's say BTC here. If BTC was trading at like 70,000 on Coinbase and like 80,000 on futures, that wouldn't make any sense, right? I mean, such things have happened, but that's not ideal, right? Because then you open up this huge market for arbitrage and, you know, you get kind of angry customers, and no futures exchange wants that. Futures wants their prices, their perpetual prices at least, to run kind of in line. So they accomplish that with an index price. And this is just basically the futures contract wants to say, okay, we want to determine what the fair price of Bitcoin is. But we also know that if we just take the price from one exchange, it would be very easy for a very large trader or sophisticated team of traders to come in and pump the market on that one exchange and, you know, have opened up like massive leverage positions on futures with that and basically come in and manipulate the market like that. So let's make it hard for them to do. So basically all these futures contracts, they're going to get the price of Bitcoin from Coinbase and Binance and Bitstamp. Okay. So all these exchanges are feeding in the spot price of their contract to the futures market. And the futures market basically, you know, has weights like, okay, it's like, we're going to look at 20% here and maybe 40% here, right? And 40% here, whatever their weighting is, they weight it somehow. And then they average those three prices out, right? Or 5 or 7, however many index providers they're using. And that makes the index price. Okay. And that is essentially what the mark price is based on, right? The mark price is the fair price of the futures contract. And that is influenced by, the funding rate is how high or below, how above or below is the index price to spot price. If the index price is, let's say the index price is blue, and the index price is red, and the mark price is blue. If this is the case, then funding will be positive. Longs will pay to hold long positions, and shorts will get paid to hold short positions. Okay. And this mechanism helps keep the mark price, the price of the contract that you're trading, in line with the index price. So we don't have these wild deviation swings. It's all incentives for people to take the right side of the trade and to fill each side of the book. So index price gets a modification with funding rate. That gives us our mark price. Okay. And it is the mark price that determines your liquidation levels, or, you know, when you get liquidated. There is also last price, which is actually the price of the contract that we're trading. And that is just literally the price. It's just literally the price. The last price is the price of the contract, but the last price doesn't determine liquidations, because someone could come in and put in a massive amount of orders in, put in a huge market order. Last price would spike, but then it would come back down closer to median with the mean price. So all that to say, index price is the basis of price based off spot. Index price is an average of all the spot prices plus a modification with funding rate, which is just determined by how aggressive the longs versus how aggressive the shorts are on any particular day or segment. And the last price is the actual price of the contract. All right. So again, they all move in tandem. They all diverge a little bit. And they're all necessary to have a cohesive and modern futures and derivatives market that we all enjoy in cryptocurrency. Yeah, so life's good. So the only all that's good to know at a fundamental level, but practically as a trader, all you need to know is that when you're using take profits, I always want my take profit to trigger. I never want my take profit to get missed ever. So I want to put all the odds in my favor that my take profit order will get filled. And to accomplish that, I always select last price for my take profits. Okay. Because I don't want the mark price to like slowly get up there. Like, no. I want if I got to take profit here and some crazy trader like just comes in and market buys 20 Ethereum and hits that, mark price might not reach there. And so anyone who has liquidations here, they don't get triggered, but my take profit gets filled. All right. And similarly, my stop loss, I don't want my stop loss to ever get triggered. So I want to put all the odds in my favor to prevent a stop loss being triggered. And so to accomplish that, I always use, oh, sorry, I realize you guys can't see that. I always use mark price for my stop loss. Okay. Because it is mark price that determines whether or not liquidations get triggered. And I don't want last price to trigger my stop loss, right? If my stop loss is here and price briefly plunges down and wicks back up, but mark price doesn't actually get that low because it's averaged out from spot, then my stop loss won't get filled and I'll still be in the trade. So always last price for take profits, always mark price for stop losses. Okay. And at the end of the day, practically, that's really all you need to know. All right. However, I mean, the topic of mark price versus index price versus funding rate and deviation, hundreds of thousands of strategies have been based around just those 3 data points alone. And there is an ocean of analysis, information, and complexity that we could dive into if we had more time, but we don't. We don't have the time because it's time to go, guys. Thank you very much for joining me for another exciting episode of the live crypto trading room brought to you by crackingcryptocurrency.com. I hope all of you have a fantastic and productive rest of your day. I hope you trade safely, and I hope you will join me for tomorrow's adventure back into the cryptocurrency markets. See you then.